Hello and good evening to all of you. We are here today to discuss Manappuram's Q1 FY24 results. We have the entire management team with us, Mr. VP Nandakumar, who is MD and CEO, Sumita Nandan, who is the ED, Mr. Bindu, who is the CFO, Mr. Ravindra Babu, who is MD of Ashirwad Microfinance, Mr. Rajesh, who is the CFO, Mr. Kamal Parmar, who is Head of Vehicle Business, Mr. Suvin, who is CEO, and Mr. Robin Karuwale, who is the CFO. Without further ado, I'll hand the call over to Mr. Nandakumar for his opening remarks, post which we'll follow up with the question and answers. Over to you, sir.
Thank you. Good evening, ladies and gentlemen. Welcome to the conference call for our first quarter FY24 financials. I take great pleasure in presenting our results at a time when India is being hailed as a bright spot in the global economy, and the optimism about India's growth prospects is all pervasive. Yes, we are now the most popular and youthful country in the world. The young cohort will power our country, and we at Manappuram Finance are well placed to seize the opportunity. In the last call, I had stressed the need for a balanced and prudent growth strategy. This quarter, we achieved a notable growth in both AUM and profitability. I am happy to share that we have recorded a net profit of 498 crore with an improvement of 77% year-on-year, driven by profitability in gold loan and consolidation in microfinance business. It has witnessed a clear turnaround. Gold loan AUM stands steady at 20,603 crores, while standalone AUM at rupees 25,768 crores has grown by 12.6% year-on-year. The consolidated AUM has touched 37,086 crores Q1, representing an increase of 20.6% over the year-ago quarter. I remember with gratitude all the stakeholders for this creditable performance, but more than anything else, it is the trust of our customers that has helped us negotiate the various challenges that crop up, big and small, and press ahead of our journey of progress. The NBFC space is growing with the emergence of new players, but India's underpenetrated financial markets gives room for a larger number of players to coexist. Company's microfinance subsidiary, Ashirwad, has posted an AUM of rupees 10,141 crore, showing a growth of 44.6% year-on-year, and a net profit of 111 crore during Q1, vis-a-vis net loss in the year-ago quarter. I have no doubt that the share of microfinance in the overall profit pie is set to go up in the days to come. Like in the previous quarters, we continue to post maximum growth in the microfinance business, recording 59.8% increase year-on-year with an AUM of 2,805 crores, followed by home loans with AUM of 1,203 crores, registering 37.5% increase over the corresponding quarter in FY23. The strategy of diversifying into other sectors is gaining pace. The share of non-gold verticals in our total assets under management now stands at 44%, and this is very much in line with our stated objective of achieving a 50-50 portfolio mix between gold and non-gold segments. We will continue with our policy of becoming a well-diversified NBFC. Microfinance business is expected to continue to gain traction as this sector correlates well with economic recovery. MSME and personal loan segments are also areas where we want to increase our presence. All this while we continue to maintain a comfortable liquidity position. For a more comprehensive review of our financial performance, I hand the floor to our CFO, Bindu. Yeah.
Thank you, sir. Good evening, ladies and gentlemen, and thank you for joining us today. With regard to Q1 performance, our consolidated AUM for Q1 FY24 was rupees 37,086 crores, representing 4.6% sequential growth and 20.6% YOY growth. Consolidated profit after tax was rupees 498 crores, which was up by 20% Q-on-Q and up by 76.7% YOY. ROE on a consolidated basis was 20% and ROA was 5%. Our leverage is currently only 2.8 times. GNPA at 1.45% versus 1.33% during the previous quarter. Cash and cash equivalents on a consolidated basis was rupees 2,452 crores. Undrawn bank line was rupees 2,580 crores. Our CP exposure is nil in the standalone entity. Standalone borrowing cost has gone up by 18 basis points in Q1 FY24. About the gold loan business, which constitutes 56% of consolidated AUM, whereas the remaining 44% comprises microfinance, vehicle, housing and MSME business. Consolidated gold loan AUM was rupees 20,603 crores, increase of 4.3% Q-on-Q and YOY flat. During the quarter, we were able to add 4.46 lakh new customers. Our average gold loan LTV at 64%. Online gold loan book accounts for 55% of total gold loan book. Our standalone PAT was rupees 381 crores, up by 23.2% sequentially and up by 31.3% YOY. Coming to microfinance business, Ashirvad Microfinance AUM stands at rupees 10,140 crores, including gold loan AUM of rupees 790 crores, Q-on-Q 1% growth and 45% increase YOY. PAT for MFI business has increased to rupees 111 crore in Q1 versus rupees 199 crore in Q4 FY23. Collection efficiency from MFI business stood at 102% and disbursements during the quarter was rupees 1,814 crore. Cumulative ECL provision in Ashirvad rupees 217 crore and net NPA stands at 1.29%. Ashirvad CRAR improved to 22.6%. ROA for the quarter was 4.4% and ROE of 26.6% for the quarter. Vehicle finance, we have reported an AUM of rupees 2,805 crore, which is up by 14% Q-on-Q and 60% YOY. ROA for vehicle finance business around 2.2% for this quarter. Collection efficiency including arrears 100%. GNPA 2.9%. Home loan business reported a book of rupees 1,203 crore, up by 9.7% Q-on-Q and 37.5% YOY growth. It now operates from 66 branches and reported a profit of rupees 3.2 crore. Collection efficiency for the quarter was 98%, GNPA at 2.8%. MSME and allied business AUM stands at rupees 2,360 crore, ROA at 3.2, collection efficiency 97% and GNPA of 1.8%. Our on-lending AUM stands at rupees 805 crores with a disbursal of 47 crores during the quarter. Provisions and write-offs in the standalone entity, rupees 21 crore compared to 4.3 crore in Q4. Board declared an interim dividend of 80 paisa for the quarter. Company is well capitalized with a CRAR of 30.5%. Net worth stands at rupees 10,078 crore and the book value of rupees 119. Thank you. We can now go for the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Abhijit Tibrewal from Motilal Oswal. Please go ahead, sir.
Yeah, thank you and good evening, everyone. Sir, congratulations on a good quarter. So I had 3 questions. The first one is more around the yields and the cost of borrowings. So just wanted to understand, last quarter we had guided that because we kind of moved from this 3-month to 6-month tenor, we had seen a minor blip in yields. This quarter on slide number 6, you reported net yields on gold loans have improved to about 21.6% during this quarter. So now what's the trajectory going to be like for the coming quarters?
Can you repeat, Abhijit, because you are not heard in between.
No problem, sir. I'll repeat myself. So last quarter we had shared that because there was a change in gold loan tenors from 3 months to 6 months, we had seen a minor blip in gold loan yields during last quarter. That has obviously recovered this quarter, what we reported on slide number 6. The net yields on gold loans have improved to about 21.6% versus 21% that you reported last quarter. I wanted to understand what's the trajectory going to be like on gold loans going forward. And a related question here, while we have suggested that the cost of borrowings have gone up by about 20 basis points, what's the trajectory going to be like? Because very clearly we didn't see any significant rise in cost of borrowings last year, even though repo rates had moved up. So if you could just answer these 2 questions first.
Okay. So gold loan, we hope to maintain a yield between 21 to 22%. That is, our schemes are structured like that, and we hope to maintain that. Cost of borrowing has gone up by 20 bps, and it will be, what you can say, what is the expectation?
Yeah, so this quarter we have seen an increase of 20 basis points. The reset is happening, and even without repo rate hike, we are seeing a slight increase in the rate from banks. So I think this quarter also we have to expect a similar increase.
Got it, ma'am. Then the second question that I had was more on the gold loan growth. Obviously, we are seeing good gold loan growth, strong gold loan growth last quarter in 4Q. Again, another quarter of strong loan growth. But ma'am, what I wanted to understand here is very clearly, right? I mean, while giving your opening remarks, you suggested that we've added about 4.46 lakh new gold loan customers. But in terms of the overall gold loan customers that you report, they are not going up. The tonnage, if I look at it, it's not going up. So essentially, is it predominantly, higher gold prices, which will eventually lead to higher LTVs versus 64% that you've reported as on this quarter? which will lead to gold loan growth in the coming quarters, or is there also reason to believe that we can also increase the customer franchise in gold loans going ahead?
So we plan to grow at around 10 to 12% annually by increasing the customer base. It is not just rallying around the gold price. So the customer acquisition is seen improving, and that is the reason for our expectation to grow at a rate of 10 to 12% annually, which has been told earlier also.
Got it, sir. Just one last question for Bindu ma'am. So in the consolidated statement, we are seeing about 55 crores of net gain on fair value changes. If you could just explain what is this?
So in the case of direct assignment transactions, we can do an upfronting of income based on the true sale concept. So it was there in the last year financials also. This is coming from MFI financials. So if you see last year also some quarters based on the DA number, there will be a income, but in the subsequent quarters it will get adjusted.
No, shouldn't that come in net gain on the recognition of financial statements? Because all other companies that we track, they typically report this upfronting of assignment income in net gain on the recognition of financial instruments. So this quarter, because of assignments, we are reporting this 55 crores of net gain on fair value changes. Why I ask this is a much bigger number, ma'am. YOY, this was 10 crores. Last quarter, it was about 9 crores.
But if we see the last year, full year number, because we were doing on an average 1,000 to 1,500 crore DA, for the full year it was 100 crore. So that will get adjusted. So based on the DA volume, because this quarter DA was high, so it was there. And we are creating the service liability also for that portfolio. So it is normal operating income only.
Got it, ma'am. This is very useful, ma'am. I will maybe come back in the question queue. Best wishes to the Manappuram team. Thank you.
Thank you. The next question is from the line of Nikhil Agarwal from VT Capital. Go ahead.
Hello. Hi, thanks for taking my question. One thing on asset quality of MFI book, the stage 2 has decreased by a lot. It has come down from 1.9% to 0.8%. And stage 3 has not increased by that much. So if you could just explain the movement there. Also, the Concall provisions that we have made, a major part of it has come from MFI book. So if we are seeing good resolutions, what is the need to make such provisions, and will this continue? And lastly, if you could provide less than 12% yield part of book that we used to provide in our presentations.
So in the case of MFI book, there was some write-offs also. That is the reason this quarter, though the movement between stage 2 and stage 3, the impact on the P&L was high, but we expect the credit cost to overall remain within the guidance. So that is the impact for this quarter. And on that 12% etc., as the gold loan yield is settled, we thought of removing that slide, but 90% of the book is above 12%.
10.5 only that below. Good.
Sorry, 90% is above 12% yield.
Yes.
And now this will not go beyond 90, I guess, as it was mentioned last quarter.
Yeah, it will be in this range.
While maintaining overall yield of around 21-22, this will be same range.
Okay. Also, this write-off, sir, if you could provide us a number, how much was the write-off? And you said that it will remain in the same range. So are we expecting more write-offs this year? And will the credit cost remain at the same level?
So during the quarter, we are written off around 57 crores.
Okay.
So in the coming quarters, we expect a reduced credit cost.
There was 57 crores of write-offs in this quarter. And in coming quarters, we are not expecting such write-offs?
Yeah.
Okay. And was this entirely from micro? Is there any more stress in this book, in MFI book?
Entirely from microfinance book.
Okay. Thank you.
Thank you. The next question is from the line of Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. First part is if you can decompose this 10-12% growth guidance, because in this 10-12% there'll be a ticket size increase of 5-6%, which is a normal inflationary growth. There'll be some branches which would be breaking even, or the productivity would increase, which would be another maybe 2%. So actually, the actual growth is limited to maybe less than 2% in that case. So if you can decompose that. Second is if you can split the book into less than 50,000, 50,000 to 1 lakh, 1 lakh to 2 lakh, and 2 lakh and above. That is the first data point I wanted. And the second data point is from Bindu Madam for options, weighted average LTV, both in percentage as well as rupees. Thanks.
So 10 to 12% growth affected is from new customer acquisition.
No, it has never happened, sir. From new customer acquisition in the last 10-12 years, I've been seeing this company, sir. It has never happened, sir.
Yeah. But so the conditions are improving now. It's not relying on the gold price. Yeah. Other details?
Tickets.
Yeah, 50,000 up to 50,000, 26%. 50,000 to 1 lakh is 17%. Then total 43 and above 1 lakh it is 57%.
And ma'am, the options?
Option, comparatively less option in this quarter. It was only 14 crore during the quarter.
And ma'am, the LTV, ma'am?
LTV 64%.
And rupees? In rupees?
I will send you, Subran.
Sure, ma'am. Thank you.
I can send you.
Sure, ma'am. I'll take it offline.
Thank you. The next question is from the line of Piran Engineer from CLSA. Please go ahead.
Yeah, hello. Hi. Am I audible?
Yes.
Yeah, hi. Congrats on the quarter. Just a lot of things. Bindu, you mentioned the credit cost guidance you are leaving unchanged. If you could just remind us what is the guidance for the year?
So on the average AUM, our expectation in the new scenario of 2% credit cost. So that we should be able to maintain. That is for 2.5% credit cost is what we are expecting.
But it was 3.8%, right, this quarter. So this sharp decline is coming due to what reason?
So this quarter we have taken some write-off, and that is the reason it has gone up. But if you see the stage 1, stage 2, stage 3, etc., we are not expecting higher.
1511.
Okay. And just secondly, in terms of for the gold loan business, and as Shubhranshu was saying, I have had like 2.5 million customers for now 4-5 years. Just wanted to understand in this 2.5 million, let's say how many would be new to Manappuram and how many are just rolling over their loan?
During the quarter, we added new to Manappuram customers of nearly 4.4 lakh. So as it is a fast-earning business, we are adding a lot of new customers, and that is helping us to grow the business.
Okay, and if I just multiply this number by 4, would that be the number of new customers you all added, last year?
Every day we are adding almost 5,300 new customers. So that trend is improving as the category of customers which we are addressing is also becoming active. So we are seeing improvement in the new customer addition. So that is helping us to grow the business.
So, sorry, Biddu, I think when you say new, is it new to Manappuram or someone who took a loan 3 years back, he's again coming back, you're classifying this in this 4.4 lakh?
New to Manappuram.
So that's quite a large number, right?
Onboarded, then we will consider as an existing customer only. There will be campaigns on lost customers, but this 4.4 lakh is totally new to Manappuram.
Okay, so if you could just tell us then, apart from 4.4, how many loans did you all disburse this quarter then?
30,000, how much? 30,000.
No, not in crores, in number of people. Because it will be new to Manappuram plus some people rolling over plus some old people who are reactivated.
Yeah, that always used to be very high. Because our average life of gold loan is around 100 days only. So to maintain a 20,000 crore book itself, we have to do a 1,20,000. So almost 3 times of that. That will be the disbursement number. So that is larger number. So we are adding new customers. Business is improving, but at the same time, the churning is very fast. So during the quarter, we did a disbursement of almost 39,000 crores.
And to how many customers? 39,000 crores?
50.49 lakh accounts.
Could you repeat that, please?
50.49 lakh accounts.
15.49.
50.
50.
Oh, 50.
Yeah, because 23 lakh customers, the number of accounts around 44 lakhs. So every quarter there will be one churning.
90 days only the life of the loan.
Okay, fine. I think I'll take this offline then. Thank you.
Okay.
Thank you. The next question is from the line of Nischint Chawathe from Kotak Institutional Equities. Please go ahead.
Yeah, sorry, this is just again a clarification on your cost of borrowing. And, your cost of borrowing has gone up around 70 basis points quarter on quarter. Is that the right way to look at it? Or?
So, in the standalone entity and the subsidiary Ashirvad Microfinance, we have seen an increase in cost of borrowing. So, the 70 basis points largely on account of increase in cost of borrowing in Ashirvad. Standalone, the increase is 18 basis points.
And, during the quarter, most of your borrowing is coming from, the increase is mostly coming from bank loans. And you practically not raised any, NCDs, or in fact, NCDs have gone down. Is there any specific reason for it?
So, in the case of standalone entity, we did a NCD transaction from LICVD. And as you know, mutual funds market, of course, there will be, or the NCD investment will be less due to this last quarter ED issue, etc. But again, we are getting response, so we are working on few transactions.
Sure. And just coming back to the cost of funds increased significantly in the subsidiary because of any specific reason?
Few of the bank lines, the reset happened during the quarter, so that is the reason for increase. And nowadays, for a 2-year term loan, etc., it is coming around 10% range. So that is the reason it has gone up.
Have you seen any adverse reactions within bankers or debt markets after the ED, the news that came out?
So we are getting liquidity, but there will be some additional query or those things are happening. But so far we have enough liquidity to grow the business.
Got it. And finally, I think on the competitive side, on gold loans, do you really, believe that the worst is over, or would you still see there are pockets of competition?
So, gold loan, we are able to grow, and as I said, we are expecting a growth of 10 to 12% through new customer acquisition, not only through new customer acquisition, but also the higher amount of loans for our customers. Our ticket size is slowly going up compared to previous years.
But the competitive intensity from bank has reduced, or would you kind of say it's stable?
So you are asking about competition?
Yeah, that's right. That's right. In gold loans. Yes.
The bank's customers and NBFC customers are of different profile. NBFC customers wanted quick turnaround, and they foreclose and come again, 80% repeat customers, etc. So the bank's competition, we may not lose our customers. There is enough headroom for banks and non-banks because the space is very large.
Sure, got it. I think those are my questions. Thank you very much and all the best.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Shripal Doshi from Equirus. Please go ahead.
Hi, sir. Thank you and congrats for the good set of numbers. Sir, just on the cost of fund side, wanted to understand what is the incremental cost of borrowing for the standalone business and for the MFI business?
Sushil?
Standalone it will be on around, we are expecting term loan in the range of 850 to 875. Wherever this in terms of Ashirvad, incremental we are expecting in the range of 9.75 to 10.
Okay. And have we seen any increase in the last, say, on a sequential basis, on a quarter-on-quarter basis?
As you told in the earlier also, last quarter also 20 bps cost of fund has gone up. So similarly also we are expecting the coming quarter.
Okay. Just while this number was said earlier in the call, wanted to understand the split of the gold loan book in terms of ticket size. So which is below 50,000, 50 to 100,000, above 100,000 and above 300,000 ticket size.
Up to 50,000, 26%. Up to 50,000 to 1 lakh, 17%. Total 43%. And above 1 lakh, 57%. Above 2 lakh, we will come back to you.
Okay. And what is the update for the capital raise plans that we had indicated for the MFI business?
So we are exploring many ways because we may need to raise capital. So we are not finalized. So various options are being considered.
So will it only be limited to capital raise, or we might look at other options as well? Like, I mean, selling the business or something like that?
No. So we don't want to sell our stake. So will not be a seller at all. So for the growth capital, we may raise money from outside.
Okay. Got it, sir. Thank you so much and good luck for the next quarter.
Thank you.
Thank you. The next question is from Alok from MNCL. Please go ahead.
Thanks for the opportunity and congrats on great set of numbers, sir. I was just trying to understand, how do you look at the improvement in the yields on the gold loan portfolio front? I'm sorry I missed the initial conversation, but so we've seen meaningful improvement in the yields there. How do we look at those numbers incrementally?
So we hope the yield will remain at a range of 21 to 22%. So we are able to get this expected growth of 10 to 12%.
So you're saying that to the 10-12% customer and AUM growth addition, we are not seeing any kind of pressure on the yield front?
Yeah. We hope we'll be able to maintain this yield.
And some light on the yields for the MFI portfolio?
The MFI portfolio, the yield is around 25%.
Right. Okay. So is there too much to read that when I look at your gold loan AUM and the gold tonnage, it's kind of been, kind of not going in the same sync. So are we kind of trying to read too much into it, or the tonnage quantums will also improve as the new clients get additions go through?
Someone talked about competition from banks. What I hold is the bank's customers, their profile is different. They generally avail a very large ticket size loans, and they can wait for more time at the office for availing the loan. Whereas our customers always look at that turnaround time of around 10 to 15 minutes. They are mostly wage earners, self-employed people, etc., etc. So these customers are not going to pawnbrokers. We are going to pawnbrokers. And that segment is very large, even though it is not estimated. It is a general assessment that the size would be at least 3 times of the organized sector. So, with our presence, etc., we will be able to wean away those customers. That is what we have been doing. And there was some sluggishness because of this pandemic, etc., etc. Now the things are slowly coming back. And with growth projection, the economy, etc., etc., we hope to maintain growth at the level what I have told you.
Sure. Thank you. I'll get back into the question, please.
Thank you.
Thank you. The next question is from the line of Kushan Parekh from Morgan Stanley. Please go ahead.
Hi, sir. Thanks for taking my question. I had a couple of questions. So the first question is around Ashirvad MFI. So, we've had good YOY, 40% plus YOY growth in the AUM in Ashirvad, but QOQ it was still flat. So, what is the growth guidance that we are looking at for the MFI business going forward? And also, we had a little bit of a QOQ uptick in yields. So we said that yields are currently around 25%. So do we expect these yields in the Ashirvad MFI business to sustain going forward as well? And if I could just ask one clarification question, the write-off that we had in Ashirvad business, could you just repeat that number?
So, AUM growth expected is around 30-35% during the current year. So there was some sluggishness because we had some concerns about the funding availability. So we reserved, even though that has not happened, we actually reserved some cash liquidity with us. That is why it was slowed down to some extent, but in the coming quarters we will be able to cover it. The second part of the question is the yield. Yes, this segment is not much concerned about the yield. The concern is the availability of service, how fast we can disperse the loan, etc. So these issues are addressed with the technology, etc. So which is on the improve also. So the concerns about we are able to achieve growth of around 30-35% with a yield of 25%. This is what we believe. About the write-offs, yes.
Yeah, write-off during the quarter was rupees 57 crore.
Understood. Thanks for this. Just if I can just squeeze in a couple of more bookkeeping questions. What was the gold loan ticket size for this quarter, average ticket size, and the average tenure?
Average ticket size 58,000, and the tenure it is nearly 90 days only. That is still continuing. Average tenure.
All right. So just trying to understand, I mean, would our growth have been benefited from the slightly longer tenure in gold loans?
The average tenure remains around 90 to 100 days. There is no change in the tenure.
Okay. Understood. Thanks, sir. Thanks for answering my question.
Welcome.
That's all from my side.
Thank you. The next question is from the line of Jigar Jani from B&K Securities. Please go ahead.
Yeah, hi. Thanks for taking my question. On the non-gold businesses, we have seen a spike Q1Q in GNPA for almost all non-gold businesses, be it vehicle finance, personal loans, MSME, or housing finance. So any guidance on where you see these numbers settling for each of these businesses? Because these are like high-growth businesses for us, but the asset quality also seems to be deteriorating marginally on a Q1Q basis. So any color on that?
A marginal increase only, and if you see marks, there will be some extra effort to do that. It is only because of that only. It's a marginal increase only. We are not seeing any asset quality issues. It is a marginal increase during the quarter.
So going forward, can we expect this to be range bound or probably decline across this? Okay.
So here and there, it may be 10-20 basis points up and down. That is our expectation.
On an average, it will be maintained, and also we are making efforts to bring it down.
Okay, sure. And the growth rates for these businesses would be sustainable at this 30 to 50% on an average because of their low basis at which they are at, right?
See, we have a large customer base, and we have not expanded to the territories where we do gold loan. We are slowly expanding, and in these sectors, the base is low. So we hope we'll be able to maintain around 35 to 40% growth annually.
Okay, great, sir. Thank you so much. That were all the questions. Thank you.
Thank you. We have a follow-up question from Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yeah, thank you so much for allowing me to follow up. Sir, this question is for Raju, sir. I wanted to understand that during the call you highlighted that the gold loan average tenor is remaining between those 90 to 100 days. Well, I mean, don't you think that given that earlier when we used to follow this 3-month gold loans, we were always on that constant treadmill where loans either had to be renewed or rolled over. And I think sometime in the last earnings call you were highlighting that the yield compression happened because we moved to 6-month gold loan tenors. Are you also evaluating 12-month gold loans, right? I mean, because once we do that, I mean, loans will tend to stick around longer on your balance sheet rather than you having to spend so much time and energy on trying to renew or roll over these gold loans.
See, the tenure is not the reason for the average life. See, what we see from for the times immemorial is around 25% of the loans are closed during the first month of pledge itself, and another 20% during the preceding month, another 40% during the 3 months. This is the culture being followed by these customers for a very long time. It is not because of the shorter tenure. Even when the tenure was 3 months, the auction takes place within 6 months only. So it is not because of that. Even when we increase the life of the loan tenure to 6 months also, it remains like that. It is not because the tenure is shorter or longer. It is the nature of our the customers, because they avail for agriculture for farming or for small businesses, etc. They are conscious about the redeeming the ornaments. So as and when they get the money, they redeem. And then again come back. 80% of our customers are repeat customers. So that is the nature.
Got it, sir. And sir, one last question from my side. I just wanted to understand how are we kind of now defining these online gold loans, OGLs. Very clearly, if I look at the last 4 quarters, over the last year, right, the proportion of online gold loans that you report has moved up from 46 to 55%. If I look at the ticket sizes that you report in OGL, while ticket sizes at the overall level has gone up by about 4% YOY, it has gone up by 12% in OGL. So how are we defining OGLs now? And essentially, why are we seeing such a sharp increase in ticket sizes vis-a-vis the blended ticket sizes that we report?
The ticket size, there is not much difference. See, the online gold loan actually increases the comfort level. They can operate from anywhere 24 hours. Other than that, there is no difference.
But we are seeing a slightly higher ticket size for gold loans since online gold loans since beginning.
There is change in between also. The same thing only, but now the customer convenience is there. More and more online, Google Pay, Paytm, everything we have a tie-up, and the features we added in our app also. You can see that app rating also daily increasing. Through that way, more convenience we see that customers are started using more and more on a daily basis.
Got it. So, sir, anything where the disbursement happens online is classified as an online gold loan.
Online into their account, there is an app, etc., and they can operate from anywhere. Inward and outward.
Got it, sir. This is useful. Thank you so much.
Thank you. The next question is from the line of Manan Agrawal from Value Capital Partners. Please go ahead.
Yes, hi. Am I audible?
Yes.
Okay, thank you. I have 2-3 questions. So first question is, why is Ashirvad Microfinance's loan book flat QOQ? Given the growth guidance that we have for the full year of 20% growth on the consolidated loan book, we see that in Q1 the Ashirvad Microfinance loan book is flat Q-on-Q. And what kind of sequential Q-on-Q growth do you look at internally while setting the target to deliver a YOY growth of 20% plus? That's question number 1. Question number 2 is, when are we coming up with the IPO for Ashirvad Microfinance business? That's question number 2. And question number 3 is with regards to this show cause notice issued by RBI. So what is, briefly if you could explain what is that and what kind of reply have we given it to RBI, because I couldn't see that reply in the exchange filings. And question number 4 is with regards to the ongoing ED investigation. So briefly if you could tell us where at what stage is it right now. So those would be the 4 questions. Thank you.
So Ashirvad growth, the last quarter, we reserved some liquidity for some time, anticipating some liquidity problem which has not actually happened. So around 1.5 months, we slowed down dispersal. That is the reason why. But we are making it up in the coming quarters, and our expected growth of around 25-30% we'll be able to achieve as far as Ashirvad is concerned. Second is the ED investigation, as intimated earlier. The FIR has been quashed, so the predicate crime is gone. So when the predicate crime is gone, as per the rules, as per the law, the secondary investigation, that is ECIR, also should go. There are several pronouncements by the apex court. So we are in the process of getting the second part also cost, which may happen within 10 days. That is what we believe. So as the FIR is cost, a major issue is gone. The other one is only a procedure. Regarding the show cause notice, RBI, Bindu,
Yeah, so this RBI show cause notice is on account of the pending auction surplus. So we replied to them giving the additional measures which we have taken to reduce this. Sometime back it was almost 53 crore and now we reached to around 37 crore now. So we will continue our effort and we are using the technology also to identify these customers. Out of this 37 crore, a large chunk of the amount relating to the period before 2018. So there are some practical difficulties to find out, and the average amount also very less only. So in all cases, we have sent the registered check to the customers. But in many cases, if it is a small amount, these customers are not encashing the check. So we are following up with these customers to encash the check. So a lot of effort is going on. So we believe that we should be able to reduce this. That is
and
how we replied to
when are we coming up with the IPO for Ashirvad Microfinance?
So Ashirvad definitely need capital for growth. From the promoter side, we don't want to sell any stake. So we'll retain our stake there. At the same time, for growth capital, we need to raise money. We have not finally decided whether to go for an IPO or raise money from private equity side, etc., etc. So discussions are going on, but no decision has been taken by the board.
Okay. And if I could squeeze in one more question, please. So looking at the future, we have set the target loan book at 50-50. So basically increasing the non-gold portion. So if I look at the future, the loan growth, whatever that will happen, so would we be increasing our yields in line with the increase in cost of borrowing that will happen in the future? So would it be fair to assume that the net interest income growth rate would exceed the loan book growth rate, whatever you will deliver in the future?
See, the gold loan, we have the ROA, and the other businesses also are improving their ROA because the growth is happening. The per employee business is increasing. So on average, we are hopeful of maintaining an ROA of nearly 5%.
Mm-hmm. Yeah, how about the net interest income growth? Would that exceed the loan book growth?
Net interest
in line with the growth only.
Yeah, with the growth only, yeah.
Okay. Okay, thank you. That will be all from my side. Thanks for answering my questions.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Pranay Khandelwal from Alpha Invesco. Please go ahead.
Hello. Thank you for the opportunity. I wanted to ask about your opinions about this new initiative that the government is taking with regards to open credit enablement network, and how may that affect our business going forward?
So we have to analyze that. But see, what I can say is, we are doing business at the bottom of the pyramid. So in this area, there will not be any negative impact. with the technology, etc., financial inclusion, we are on the inclusion side. It's possible. And the rural India is also growing. So I think with the newer technology, AI solutions, etc., we are going to be benefited.
Okay, so we do not see this as a threat for the next 5-10 years or anything like that. Okay. And I also wanted to ask about any updates on the approval of branch expansion by RBI.
So, see, at a consolidated level, we have added around 520 gold loan branches. So that takes care of our expansion needs. To your specific question of getting branch expansion in Manappuram Finance, yes, we are yet to get.
Okay, but
at
it has
level, we are able to.
Hasn't it been a very long time since we have got the approval? I think we applied for it in 2020 or 21.
Yeah, see, the challenge here is the surplus in gold loan. So we have done few things to ensure that the surplus is not increased. So the surplus has gone to a level of 52 crores. Now it has come to 36 crores. So the progress is being made, and the RBI is being informed about that. And I hope that will take care of the RBI requirements.
Okay. All right, that will be all. Thank you.
Thank you. The next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Hello. Hi. Thanks for allowing me to follow up on my question. One question on cost of borrowing. One follow-up there. There's one confusion. So 20 bits increase came from gold loan, standalone book. And around, if I'm not wrong, 50 bits, around 50 bits came from MFI book. And blended cost of borrowing increased by 62 bits. So you said that 20 bits is expected again in the standalone business this quarter. Could you give the same expectation for MFI as well? Because since the reset caused 50 bits, will it again happen in this quarter? And also, just relating to this question, if yields are maintained at 21 to 22% and incremental borrowing is 20 bits higher, am I wrong when I say that we will not be able to maintain such margins, or it will dip a bit in the coming quarter?
See, the coming quarters, now the increase in the CRR, etc., all will depend on the government's policy. But what I can say is, the sectors we are in, the small ticket gold loans, that is around 50,000, microfinance, or small ticket vehicle finance, which are mostly used cars, or MSME, where the average ticket size is around 6 lakhs. Passing on this 20 bips or 30 bips may not be difficult. So what I say is, the other one all depends on the external conditions. But internally, we are hopeful of maintaining the NIM.
Okay. And the increase in cost of borrowing from MFI book, what do we expect? Do we expect the same 50 bips increase this quarter, or is it lesser?
No, because, see, this quarter, it may remain at this level. There are reasons also. It is a PSL, and the banks are vying with each other to grab this PSL. So there is no reason why it should go on.
Okay. So, and the reset entirely we have seen. Have we seen the entire reset in borrowing in this book?
These are by way of direct assignment, etc. There is a good demand, and this quarter, this is a half-year ending. So the demand for this PSL will be more.
Okay. So just on the cost of fund side, this will remain at the same level, and overall book, even if there is a 20 to 30 basis increase, the pass on will be easier given our target segment. Am I correct when I summarize it?
See, this is not predictable because all depends on the government's policies, inflation, etc., etc. Today also you're seeing the increase in the CRR, etc. So, but what I said is, what is most important for us is to maintain the profitability. That should be maintained.
Okay, got it. Another question about the cash crunch that you mentioned. So, some while back when someone asked about the impact of such ED and everything, if it's over and if you're getting bank lines and other sanctions. So, there was a liquidity crunch because of which this quarter's MFI growth was, quarter-on-quarter, was not very great. And going forward, we are seeing sanctions coming from banks now that everything is over. Is that correct, or can we see any other cash crunch?
No, I will give you clarity. See, regarding ED case, the predicate crime is gone. FIR is quashed by the police. Police have referred the case. So, automatically, the ED investigation will go. It has gone. And we got a full stay also. In the meantime, the quashing efforts are going on. We hope that the quashing will happen in another fortnight. It is coming to almost a close. But with the FIR closing and all, the bank funding has considerably improved. It is last quarter Ashirwad didn't face because of for want of sanctions, but we reserved some liquidity, anticipating some liquidity crunch. Actually, this has not happened, but now we have started in the full swing. Other businesses in the standalone, these were not affected because of that. Only in Ashirwad this has been done as a precaution and not anything else. Now we are able to get enough sanctions from the banking system, so liquidity need not be a concern going forward.
Okay, gives much clarity. Thank you. And just one last thing, just one clarification. Some while back you mentioned that the surplus was 52 crores. It has come down to 36 crores. What was that about? If you could just clarify it for me.
So, option surplus in the case of delinquent customers for gold loan, we will recover the money through auction. And we will adjust the receivable balance. We will be reimbursing to the customer within 15 to 20 days. We have to pay back to the borrowers. So this 36 crore is the accumulated amount over 14 years. The surplus generated may over this 14 years, it may be some 300 crore, out of which 36 crore is pending. Average amount is very small, and there may be customers migrating and they may not be encashing the check. So this is the reason for unpaid amount of rupees 36 crore.
This has been accumulated for years together, not in the recent years.
Okay. Got it.
In the escrow account.
Okay, got it. And will we be able to increase our tonnage from here? What is the view there?
See, when the gold price goes up, the tonnage comes down because the people will get money with a reduced quantity. But when the gold price goes down, the tonnage goes up. This is usual.
Right. Thank you so much. And that's okay.
Thank you. The next question is from the line of Dhaval Gada from DSP Mutual Fund. Please go ahead.
Yeah, sir, a couple of questions. First is relating to OPEX growth, both in the standalone entity and in Ashirwad. What is our expectation in the current year on OPEX growth? And the second question is relating to what quantum of tonnage was released in the current quarter, and if you have some sort of ballpark number for same time last year. Yeah.
So see, the OPEX is slightly at elevated level because of the higher slight increase in the credit cost. But going forward, it will come down. The business is stabilizing, so it will come down. Regarding the tonnage,
What is the question? Release of tonnage.
The amount we already told that the transactions were happening in the range of.
Yeah, so I was more looking at the ton, like how much volume has gone in the current quarter and same time last year, 1Q23. Just to get a reference, how much is the delta change?
We'll come back to you. We'll come back.
Tonnage movement, correct?
Sure.
We'll come back to you.
Sure. And so on the first question of OPEX growth, so
it will come down. It will come down going forward.
Yeah. As a percentage of AUM, it should come down.
Okay. Good. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand over to the management for closing comments.
So thank you for the good participation. We hope that we have answered the queries to the satisfaction of all, and we definitely are available for offline and online meetings. Thank you so much.
Thank you.